Hello everyone, and welcome to this session in which we explain the concept of lower of cost or market when it comes to inventory management, known as LCM. This concept is based on conservatism. As accountant, we have to be conservative. What does that mean? It means if our inventory loses value, well, we have to write down our inventory. If we purchase this calculator for $10, then this calculator, to replace this calculator again, we only have to pay $8. It means the same calculator lost $2 in value, lost utility. What do we have to do? We have to take the loss prematurely. Now, this concept, LCM, it's covered in financial accounting, intermediate accounting, CPA exam, CMA exam. What does that mean? It means in this session, I will cover this concept based on financial accounting. Now, in intermediate accounting, I will add more complication to this explanation. But for now, you'll be able to understand the concept of lower of cost or market, known as LCM. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. So let's start by defining what is historical cost and what is market. And I notice I put market in quotation. You're going to see why. What is historical cost? Pretty straightforward. We all need to know what is a cost or historical cost of an item. It's how much you paid for this item originally. How much did it cost you? It's the original cost of purchasing or producing whatever it costs you to produce this item. What would it include? It would include expenses to bring the inventory to its current location. And we learn about inventory, the purchase price, the shipping, the handling, if you have to pay taxes, if you have to pay insurance during transit. Those are all part of the historical cost, how much you paid for this item. So you have to choose between 1, historical cost, 2, market. Now notice market. When you think of market, you would think how much this item will be sold at. Not really. In this context, market value is defined as the current replacement cost of the inventory. Remember when I showed you the calculator, I told you I purchased it for $10. Now I can replace it for $8. If I want to buy it again, I replace it for $8. So the market is $8. So for financial accounting perspective, you will be giving the cost and the replacement cost. Now, the concept is a little bit more advanced than that. Why? Because when it comes to intermediate accounting, you have to understand that market value should not exceed something called net realizable value, NRV, which is the selling price minus the cost to sell and complete the sale, and it should not be less than the NRV minus a normal profit. Now, don't worry about this part unless you are an intermediate accounting student. If you are an intermediate accounting student, you are in the wrong course because this is the financial accounting. You need to go to Farhat Lectures and go to my intermediate accounting where I discuss LCM and RV. But the reason for this is to make sure inventory is not overvalued or undervalued. Again, this part is for intermediate accounting, just to warn you that if you are seeing this and it doesn't make any sense, that's why you're in the wrong course. Once again, let's recap the purpose and benefit, and we'll work an example. It's based on conservatism. The LCM rule align with the conservatism principle, which aims to avoid overstate assets and income. So if there's any doubt, if you have any doubt whether to overstate an asset or overstate an income, don't do it. If there's any doubt, don't do it. On the contrary, understate your asset and understate your income. And this ensures that potential losses are recognized on time while gain not recognized until realized. And this is what you want. You want to recognize. Recognize means record the gain when they are actually realized. Realized means what? It means when you actually sell the item. So are you telling me I have to take my losses early and my gain later? And the answer is yes. If you have a loss, conservatism and accounting state, recognize your loss now. Loss is now. Gain, if you have a gain, sell it. Sell the item, realize the gain, and you will be able to recognize the gain. Also, another reason for LCM, it provides a realistic valuation of inventory reflecting current market condition. So go back to my calculator. Remember my calculator, when I purchased it, it was worth $10. Now it's worth $8. Let's assume I have thousands of them or hundreds of thousands. Well, I should not be reporting each one at $10. I should be reporting each one at $8, because that's the true current replacement cost. Otherwise, I will be misleading the users of the financial statement. They will think I have more inventory than I should have. The best way to illustrate this is to work a quick example. Let's assume XYZ company has the following inventory item. They have 50 units of X, 80 units of Y, and 100 units of Z. They purchase each unit of X at $50. So if we take 50 times 20, the cost is $1,000. Now, if they want to replace those items, they only have to pay 18. It seems, what does that mean? It means X lost some utility. X is not in demand. It went down in price. They have 80 units of Y, and each unit they purchased at $15. It means they have a historical cost of $1,200. Now, each unit is $17. What does that mean? It means the inventory went up in value. Do we have to do anything? Not really. That's good, but we wait. Z, we have 100 units. We purchase each one at $10. It's worth $1,000. Now, they lost utility. Now, each unit is worth $9. If we really add up our historical costs, they will add up to $3,200. Now, what we have to do at the end of the year as accountant, we have to report the inventory at the lower of cost or market. So, X, do we report it at 18 or do we report it at 20? You guessed it. We report it at 18. Y, do we report it at 15 or 17? Lower of cost or market, lower is 15. Z, is it 10 or is it 9? Lower is 9. We report it at the lower of each. We report it at the lower of each, and the lower is 18, 15, and 9. Now, remember the historical cost was $3,200. Now we compute our inventory. So 50 times 18 equal to 900, 80 times 15 equal to 1,200, 100 times 9 equal to 900. If we compute all of this, our inventory should be reported at 3,000. We paid for it $3,200. What do we have to do now? We have to write it down. Now, what we're doing, we applied this concept to each item individually. Some companies, what they do, what's allowed is to group the items together. Again, you will see this in intermediate accounting, or you could see it in financial accounting. Basically, X and Z, they are combined together, or Y and Z are combined together. You can combine the inventory rather than taking each item and comparing the historical cost versus market value, which is the same concept applies, but individually is the most conservative. Now, we have to take a loss. We have to write down our inventory because we purchased it at 3,200. Now we have to report it at 3,000. We debit a loss or cost of goods sold, some sort of an expense for 200. Usually it's eventually closed into cost of goods sold. And we write down our inventory by 200. So our expenses go up, our inventory goes down. We took a loss of 200. Why? Because we are reporting our inventory at LCM, lower of cost or market. That's basically the basic idea of LCM. But what should you do now? You want to go to Farhat Lectures, look at additional lectures, additional MCQs, true, false, exercises. That's going to help only reinforce what you just learned. Invest in yourself. Good luck, study hard, and of course, stay safe.